Ready? Hey guys, and welcome back to Getting Sticky with Vicky. Today I have a special guest. He about to help me out. His name is Thomas, aka Papa. But listen, I don't know if y'all heard about it, but he has TP Taxes. They're based in West Philly. But guess what? He'll handle you wherever you are in the country. I don't know about the world, the country. But the country in the United States. But I have some questions that I want to ask him. And I don't mind asking some of these questions in front of you guys because, some of us be a little embarrassed to ask questions. The same way we be having to text our people like, yo, what does this abbreviation mean? People feel that way about their personal finances as well. And what made me want to have this conversation is because I'm an entrepreneur, business owner, and when I see other people that are entrepreneurs or business owners, and I ask them like about taxes and finances and stuff, and then I realize I be thinking that they got it all figured out by how they look. And they be in the same boat as me most of the time. Like legit, almost everybody. Actually, I got like 4 people that want to come get their taxes done. So, I'm told to make sure they say Vicky.
Fine.
But, how are you?
Can't complain. It's been a rough start to the season. We've been super busy since January 1st, getting all the corporate returns and everything done overall. I really can't complain. Busy is good.
Busy is always good. But I need to jump right into it. I need your help. The main thing I need help with, I need help with on the business side of things, getting NGTV together as far as filing my business taxes. And here I say I better not get audited, I better not get none of this, but I haven't did my taxes for my business yet. And the reason why is because I'm not gonna say I didn't know I had to, but like the first year we didn't make any money. And the little money that we did make money. But I felt like it wasn't anything that I should file for. And is that a thing? Like, if say my company in 1 year only made $5,000, because the first year we legit was spending, buying equipment, trying to figure it out, and we only profit $5,000. Do I report that kind of stuff, or do I just sweep it under the rug?
So technically, if you have a tax ID number, you are to file a business tax return. So it depends on how you set up. But typically, most people start off as an LLC, and it benefits you if you file the taxes and you're taking a loss. So let's say you make $100 grand, and you buy all the equipment and things of that nature. Depreciation, you might get direct $20,000 off. So you pay taxes to your job, roughly, let's say, is about $15,000 on $100 grand. Then you get direct the $20,000 off in expenses, then you only get taxed on $80 grand.
Gotcha.
So it brings your tax burden down. So you lost money by not actually filing the business into the paperwork.
Gotcha. I'm not gonna lie. I need to I'll see you tomorrow, bro. I need to really sit down because I made a nice amount of money. Spent way more money, but we actually made a nice amount of money that I definitely know I need to get it all together because I want to do things with my business credit.
Right. Which also comes from the tax return. So if it's not filed, then they got no history, so they're not going to give you the money, bro.
I can't just show them my bank statement. I still have to.
They're going to be wondering what the tax return is once they see the bank statement. Then so everything is pretty much linked to a tax return. So like when you pull the credit cards or buying a house, or everything starts from the tax return being reported there, because that's where they match everything up to. So if you never follow anything, how would they even know that you had anything?
Well, there you have it. Because I really be sitting there like, dang, I know my credit probably good, but when it's really down to get something really important, I haven't done my taxes.
And even when your credit is good, so it the myth is that you can just file everything through your business credit. You're still co-signing behind it your own. So it's not like it's a standalone when you do it. So you want to keep everything together so that you can get approved for more.
I'm so happy that you just said that, because I was trying to explain to somebody else that you have to, even though you're putting things in your business name, put the property in your business name, get the loan for the business, your personal credit still has to be on point too. It's still gonna go in the business name, but they still run your personal credit, so you definitely gotta make sure you keep that intact. And also, my main reason for wanting you to come here today is personal. My personal reason is because lately I've been realizing I've been being lied to. You know, everybody get the W-2s and, you know, we want to get a return. And so everybody say, oh, you know, the best thing to do is say you didn't make any money so you can get a good tax credit back. But nobody really talk about when it's time to make those big power moves, and they be like, you ain't buying nothing if you only made $40,000.
Right.
So, why were people lying to us?
I think us growing up in the situation that we grew up in, we were just taught that because they weren't looking to grow. They were just happy and content with what actually they had. And it was passed down from them saying, hey, everybody wants a refund, and everybody wants money. But technically, a refund isn't a good thing. So what we try to teach everyone in our office is that you can never save as much as the bank will give you. And if you start to think that way, you less likely will want a refund. Now, that's not saying that we don't want you to get a refund check if you owe one. We want to get you exactly what you can get, or we want you to pay the least amount that you're supposed to pay. But it's all scenario based. We don't want you to write off a bunch of stuff and then you can't grow your company on the backside. So let's say even if you had a high salary of $200,000 and you want to write a bunch of stuff off in your business, so you only end up getting a big refund check back, which might sound great if you got a $10,000 refund check.
Right.
But on the flip side is, how can you really grow if you're getting those large numbers of refund checks? Because the only thing that tells me is you pay too much in taxes. Only time you're actually getting money back, which isn't your money if you're low income. So that's where you get the earned income credit, things of that nature.
Right.
Which means how are you still growing? So how are you buying a house and things of that nature at the same time? Or, because houses what, $200,000-300,000 now? If you're getting a refund check at $40,000, that means your income is getting ate up. It's a small chance that you're going to get that $250,000 home at the same time. So would you rather a $5,000 or $10,000 refund check or a house? So those are the things you just got to figure it out.
What is more important?
Right.
Because at the end of the day, ladies and gentlemen, there's nothing like a fresh direct deposit that say IRS return. But like he said, now when you go to buy a house and they see how much you made, now you back at square one. Most likely they're going to want 2 years. So now you got 2 more years that you got to stay somewhere you don't want to be so that you can get the proper money, the proper loan, so you can buy the house that you want. So I suggest that we start, I don't want to say being more honest, like if that's how all the money you making, granted that's what you making, but people like me, just be more honest on your taxes and stop trying to cheat the government, because you wind up cheating yourself in the long run. Now you sitting there like, damn.
So it's also a catch-22 to it, because it's situational. I bought my first house, I only made like $32,000, but there's certain programs and things that you can go through. So in that case, it worked out for me as soon as I got out of college to buy the house, because it's before I actually started making some of my salary. Now that worked out for me, which the house grew in value, but my tax returns no longer right. Now say if I was making the 30 and then I wrote off a bunch of stuff where I wanted to make 10, then I never been able to pull it off. So it's not really an income thing to where you can to get into these scenarios. It's more so about tax planning. So typically we try to plan out, like business people, we plan out 3 to 5 years. So let's say, I'll use me for example. So I just bought the lounge And what I did know is I had to pay the IRS 2 years, a bunch of money, which was fine with me. But they're not getting the money out of me for the next 3 years now because I'm not looking to buy anything.
Gotcha.
So now I get to keep all my money. It's not the fact that I'm hiding things, it's just all tied up into the business.
Gotcha.
So the fact that it's tied up now, that's part of the tax planning, so that I could be making the same amount of money, but I have so many more write-offs now to bring it back down to where it's supposed to be, so I don't have to pay them a lot. Now, once I'm ready to buy something again, then I'll start bringing it back up. Or the business will start to generate the revenue that'll show that I have more income. Then I have to find something new again to bring the income back down.
I have a question. If, say it's a married couple, who should file the kid? Should it be the person that make the most income or the least income?
So technically, they're supposed to file together, married.
I know, but some
If you
people,
do married filing separate, then you lose the write-off.
so they should always file together.
It's still situational because say if they have two businesses, then you might separate because you'll have more write-offs from the businesses, and say if they got multiple properties in a nature where they can write off, then it might benefit them more if they separated and they got more write-off. It's not a kid scenario, so it's more of an income and what write-offs you had that can benefit. It's never like you do whatever benefits the household, not just based off of like who's going to get more of a child or things like that.
Cause let me not say that. Let me not say married, because you know around this year people that have children, that's like, oh, this always be the situation. I always hear people say like, this the sticky situation. Oh, she should let me file the child. She always file the child, and I do notice like women, the man be taking care of everything, and y'all still want to file the child.
But if she makes the least, then she should keep the child because she'll get the most for the kid.
But why she want to break him off any money?
And that's a different topic.
No, that's the sticky situation.
Yeah, that's a different topic.
That's where it gets sticky at. So it always should be the person that's making the least amount.
Most of the time.
Because they'll get the bigger return.
Most of the time. It just depends on how much the less than me. So like one point in time I had a couple, I didn't even know they were together. I've always seen them separately. So at one point in time I knew the kid was on the husband's tax because he made the most money.
Gotcha.
And then let's say 3 years later they finally came in together and they're like, oh, like we thought you knew. The whole time I've been following the kid with the husband, but it should have been on the wife.
Oh.
Well, the girlfriend's taxes all the time. So if I went the year out, let's say he was getting $6,000, she got 10. Once I moved the kid to her versus him having the kid. So we try to tell everybody to come at the same time so we can figure out what's the best scenario.
The best scenario. That makes sense. Y'all hear that? Go together. Go together, because this whole time he didn't even know that they could have been. Yeah. They had a game plan.
And it's not like we can go back and change the kid back and forth. So they just lost that money for those 3 years where they could have had bigger refund checks.
Right.
That's $4,000 per year they were losing.
So I got a question. Because speaking about that kid situation, I know a lot of people that might let somebody claim their kids 1 year and then that person get audited. What does that look like from a tax situation? Like, if I just for example, I have my own child, but say I claim my sister kid and then she go and claim her kid too. Whoever filed the kid first is the one that get free and clear, or the second.
What about legal custody? So if you go, so that happens often, like where boyfriend, girlfriend, whoever, they broken up and they're rushing to file a tax return before the other one gets it. Whoever has the legal custody is going to get right. So even if, say he comes in and he files and then he gets the refund check, and then she comes in later, we can send the paperwork in, then the IRS will come back. It takes longer, but the IRS will come back, send him a bill for whatever he got, and then she would get the money back.
But it will take a minute.
Yeah.
I'm so thankful that nobody ever claimed my son besides me, because I see so many people go through it all the time. Like, oh, I let you claim him last year. I didn't give you permission to do it this year, and
yeah, it's an easy fix.
It's an easy fix.
It just takes some time. Instead of that 7 to 14 business days, it might take you 3 months, but you're gonna get your money back.
Oh, but they will get their money.
Yeah,
Cause I never followed up on the stories. I know some people say they got audited and stuff like that.
Yeah, as soon as you send out all the documents with your tax return, it's just now got another tax return in. So once you send all the documents in with your tax return proving that the kid is with you, then he will have to pay all the money back to the IRS.
Got you. And also, cause I heard you said something about mailing it in, right?
Mm-hmm.
How many years, like, if you don't file your W-2s, because I know if I, like, say if I, or what's this, 2026, if I didn't do my taxes in 2023, but I got, like, the W-2s and stuff like that, I would have to mail it in?
No. So, I mean, if you want to some random person, you would have to mail it in, but we can go back 3 years and e-file everything in. That's the legal rule, is 3 years. Now, unless they telling you can go farther back or you want to draw audit or something like that, typically you don't use your refund.
Gotcha.
Or because they've already probably processed it for you, unless they physically told you. So if people come in and they like, oh, I haven't filed in 5 years, I tell them to check with the IRS first for the first 2 years and see what they say, because I don't want to charge you and then they just don't take it at all.
They don't take it at all. Got you. So did y'all hear that? 3 years. Y'all have 3 years to go back and get those taxes done. Because my dad got to do that. That's why I asked that question. He was sitting there waiting for Big Dan, shout out to Big Dan, to do his taxes. My dad, he think I'm his secretary. My dad had me do everything for him. And I'd be like, Dad, it's kind of like, you know your child, Dad, you have to go do your taxes. I can't do your taxes for you.
You're right.
But, Tom can.
I gotta take my dad to the supermarket as soon as I leave.
He just like, I gotta be there. I'm like, yes. I remember we was like switching properties. And he like, just sign for me. I said, Dad, you have to be here. Like, trust me, if it was that easy, that's why people stealing property. Is Dad, you gotta come. My thing is that if I do your taxes and you get any money back, I'm keeping it.
Well, so he doesn't have to come in for us. I mean, everything can be done remotely.
Okay.
We just have to scan everything or take clear pictures for him. We can email
Gotcha.
the documents and package it up for us to email it over to us. But then everything can be done
Everything
remotely.
could be over the phone and
Yeah.
got you.
So most of our clients don't even come in. Like our office seems like it's empty, but we just be in there busy because most people are emailing us all the documents.
That's just basically where y'all go so you guys can sit there and work.
Right, and we just run through the tax returns all night, and then we'll just give you a call over the phone, and then we'll review everything with you. And then you sign and pay over the phone as well.
Got you. Alright, so back to my business. I just want to have a clear mind on like what are considered write-offs. Is it alright, for example, when we shoot a movie, equipment, the actors, the food, like if I buy food for production, is that a write-off?
So, I mean, to make it clear, everything is a write-off that's related to the business. Now,
Okay.
it just depends on how it's being written off is a different question. So typically you want to do bookkeeping to make sure that you're keeping up with your everything. So like equipment just don't automatically becomes a write-off. It depends on the price of the equipment. Then you got to depreciate it. So then that means it's broken down over a certain amount of lifespan of the product. So if you, let's say you bought something for 10 grand and it lasts 10 years, you're gonna get a write-off $1,000 per year.
Got you.
But it depends on what the item is, dictates on how we're supposed to write it off.
Got you. And we just need to have receipts for everything?
Yes.
Got you.
If you get an audit and then you don't have the receipt, they end up taking off the expenses.
Duly noted. So I gotta I be pretty organized, but this year I said I wanted to get more organized because you asked me for something like, I have all my receipts, but they just like all over. I have started taking pictures though.
Mm-hmm.
Do they honor pictures?
Yes.
Cause sometimes you notice the receipts start,
the fee.
yeah, they start disappearing. I was like, wait, you can't even see.
But if you're doing your books, I mean, typically, I do everything like the credit cards and
Transactions.
So I don't have to. I can do keep my bookkeeping up, and then my receipts I just throw in a box, like, or I'll get them scanned and put them on server or something. That way, if they ever come in, like I got audited one time a long time ago because I have a motorcycle on the company's books, and it was hard for them to understand why I would have a motorcycle. But during that time frame, a large portion of my client base came from the motorcycle world. And then I had my bike wrapped and on my logos and everything, so that was marketing for me. So once they seen that, then I got off. But when they came in, they were like, "Oh, let me see all the receipts and everything." I just gave them the trash bag and said, "Here." Now they seen my books, and then once they went to the trash bag, after he went through a couple, of them, he's like, "I'm fine. I'm not going through all this."
Got you. Oh, so basically, you're a very smart man. Cause at first I'm like, a motorcycle.
Yeah,
How the
really
heck
me.
that's a how is that a write-off? Oh, so can I write off a bag? I'm playing.
I mean, it depends on what industry you're in. I mean, it could be used for a movie, and it is a write-off.
Right.
So it just depends on how it's being used, and it has to make sense.
Now, is this true? Because I want to, this is something for personal and business. I was going to buy a house that I could live there, but also use it for movies as well. But then I was told like, oh, you can use that for a tax write-off. Is that true?
Percentage based, or it depends on how it's being used. So it's no different from like a rental property. If you live on the first floor and you rent on the second floor, then you can write off 50% of the property. It
Gotcha.
depends on how it's being used, how often it's being used, and if it's your house. Dictates on how it. Or if you live in it, then you can put it down as a rental property as well because you rent it out to the business.
Right.
So it just depends on how you're structuring it. Dictates on how you can write it off.
Because I was about to follow Tyler Perry model where most of his movies were shot in his own house. Like Diary of a Mad Black Woman, that was actually his house. And that's how he started off, just shooting content in his house. And I was like, that's smart because I get a chance to live in a nice house and use it for my movies. Like, why not?
Yeah, it's all percentage based. So it's even just like with a regular business, you can write off office space in your house.
Yeah, I did see that.
So it depends on the square footage or whatever you're using, you can write that particular. Or let's say you got home daycares. So depending on the percentage of the home that's being used for the daycare, it dictates if you can write off how much of a mortgage you can write off, or utilities, etc.
Got you. All right. Oh, one last thing. Do they still get that tax credit for Teslas? I have a Tesla.
That I will have to double check on. I believe they do, because I believe they do, but I would have to, and it's on certain miles.
Gotcha.
But I would have to double check on that, because I haven't had nobody ask me that in a minute.
I do know mine was one of the ones I had a Model Y, but I just want to know that they still do it, because I remember buying a car. It's a used car, and the company was like, we'll give it to you at this price if you let us keep the tax credit for that year I bought it.
Right, then if they did that, then you don't get the write-off.
But that's not every year though, right? They
No,
just said that
you get it at the purchase.
Okay.
You don't get it, it's not like a consistent, you get the same write-off for it.
Okay.
It's when at the purchase, if the company took the write-off, then they keep it, versus it's in your bill already.
Gotcha.
You can't do it twice.
All right. Do you have anything else that you want to share? I just want you guys to get everything in order with your businesses. That's my main thing. Like, if y'all want to take any advice from me, I know I always give out advice, but this year is about growth. We can't grow if we don't know as well. So don't be shy. Like, nobody's perfect out here. I'm pretty sure he has some flaws. He might not admit it, but but the goal is to get your things in order so we can elevate. We will not elevate if we don't learn, if we don't ask questions. I'm not afraid to say I fucked up. I mean, I ain't mess up like horrible, but I'm trying to get everything in order. It's not like all bad. It's just not all good. I know I don't need to file bankruptcy or nothing like that. I don't owe like $1 million, but I just want to get my paperwork in order. So when I go before these banks, go for these loans, and also receive any money that I'm owed.
Right.
Because it's not all about just paying. Sometimes you do. They owe us. That's another show. But make sure y'all check out TP Taxes. What's the address?
5613 Walnut.
5613 Walnut Street. Y'all will be seeing more of Tom. If you got any questions, it don't got to do with taxes. He's an accountant as well. My main thing is to get your credit together. I know he don't do credit, but he definitely can. Oh, you do the credit?
We got some money off of it as well.
Here, you see, get your credit together. Get that credit together, get them taxes together, and level up. This is what it's all about. Most of my followers, millenniums, we in our 40s. And if you ain't 40, you 39. It's the same thing. Holding on to the 30s. It's time. We about to be 50, y'all. We can't be sitting here playing. We can't. You don't want to be 50 years old trying to get your credit together. Come on, what we gonna look like? How can we be an example to the kids? And another thing. I'm sorry, because I'm about to go on a rant. Old heads. And when I say old heads, I'm talking women my age. Stop popping into the young girls that's in their early 20s. They have time to mess up. Y'all don't. Everything that y'all have, y'all should have. Congratulations. But you don't have to, like, look down on them. If anything, you're supposed to bring them up and school them and let them know about all the mistakes you made. But granted, most of them might not listen, but when they do register later, they be like, dang, Vicky was trying to tell me this 10 years ago. And guess what? That's going to be the slap in the face to them. Like, dang, I should have listened. But also, you're going to find people like me. When I had older women, older guys tell me things, I listened. That's why I'm above water, because I did listen. I might not did everything they said when they said do it, but I did listen. I did it when I had the time. And I'm going to just leave it at that. I want to thank Ricky Codio for letting us use this beautiful space, because I actually had a photo shoot today, and I'm like, let me get time warmed up. It's tax season, so we got to drop. So I got to take them paperwork. Oh wait, one last thing. How does that work for me? Having to do business taxes and personal taxes. Are they like all tied together?
Depends on the setup. So if you're a corporation or a partnership, then they are filed separately as a return. If you're a C Corp, then it's 100% by itself. If it's an S or a partnership, then you get K1s that goes into your personal tax return. If you're a regular LLC, then it's all filed together.
You hear that? So I'm screwed. I gotta file everything together. But that's fine. As long as I look good on paper, that's all it's about for them banks. So that's what I'm coming for, to get, so I can look good on, make me look good on paper.
The bank.
Just make me look good on paper. I don't care if I don't receive a dime back. I just need to look good on paper so I can get this beautiful house that I want, so I can make it a production house as well. Thank you.
I appreciate you having me.
And make sure y'all tune in to the next episode of Getting Sticky with Vicky. Was that good? How you feel about it?
I don't know, let me see it.